Good morning, everyone. I'm Vince Lancy, and today's market rundown we'll be discussing a 1973 silver showcase on The Price is Right, as well as updating you on Michael Oliver's MSA technical levels for gold and silver. But first, let's look at the markets. The dollar is down 5. I'll leave a chart up for you there. The dollar is down 5, 4.5 at 100 spot 80. 10-year yields are 385, up 3. The S&P 500 is 5621, up 10. The VIX is 1628, up 14. Gold is 2512, down 5.5. Was down over 10. Silver is 2998, up 8. Copper is 425, up to 2.5 cents. The gold silver ratio is stable, slightly lower. WTI after a rip yesterday is down 14 cents at 78.13. Natural gas is 198. Bitcoin is down 361 at 62 spot 400 and change. Ethereum is 26.32, I should say, down 49. Platinum, palladium are mixed. Palladium is up 14 at 973. Now over platinum, and platinum is 960, down a buck. No feel for that right now. The battle goes on. Grains are all down uniformly, slightly marked lower. Soybeans at 10.01, corn at 3.72, and wheat at 5.18, down a penny, offered unchanged, and down a penny, all respectively. There's the gold chart. You should be long gold unless it gets below that line on a weekly or monthly basis. On a daily basis, we'll get to some of those levels in a bit. Let's get to the stories. The silver dollar showcase. Okay, that's what we're going to be talking about today. Here's the front page. This is truly an exclusive. We happen to have evidence and share with you that Elon Musk likes the gold. Now, he's not going out there admitting he's buying it, but you can pretty much get the idea from what we know. Bombshell. Zuckerberg admits Biden-Harris pressured Facebook to censor content. Admittedly, not metals directly, but this is metals related, as growing distrust in government is being proven correct. We're going to touch on that a little bit today as well. And then there's the actual post for the silver dollar showcase. There were about 5 other posts that we put out yesterday, but those are the ones that we think are most important right now. All right, let's start with the Zuckerberg bombshell. Mark Zuckerberg just admitted 3 things yesterday. Number 1, the Biden-Harris administration pressured Facebook to censor Americans. Right? Number 2, Facebook censored Americans. They did it. And number 3, Facebook throttled the Hunter Biden laptop story during Biden's campaign, Biden-Harris, if you will. The full text of that letter is in a post that we have called Bombshell Zuckerberg Admits Biden-Harris Pressured Facebook to Censor Content. And we have a very brief comment on it. Cannot overstate how significant this is on multiple levels, but I'll spare you my opinions on that right now. But I will say, with regards to gold and what have you, there's a similarity to this between now and the end of the Nixon administration. Not only were we dealing with inflation, which you could argue that we're not dealing with that right now, but we are. It hasn't gone away. We were also dealing with insolvency. That was New York City going bankrupt under Ford after Nixon. And we were dealing with a complete distrust of the government in the guise of the Watergate event being a moment that just consolidated everyone's fear of the abuse of government. We're in that situation again. And so between Nixon being impeached for Watergate, between the increasing monetization of debt, and between the solvency problems of cities, which is going to happen again, that's when gold ramped up over the next 4 years between 76 and 80. So keep that in mind. This is very relevant. This admission by Zuckerberg only makes the public more distrustful. All right. A little bit lighter, the Silver Dollar Showcase. In 1973, The Price is Right had a showcase competition in which one of the showcases contained 500 silver dollars. The showcase included a new car, a week's paid trip to Vegas, and 500 silver dollars. The showcase was valued in total at $3,433. Doing some quick math, the 500 silver dollar coins were 40% coins, assuming they were struck in the year they were given, right? They're worth, depending on who you talk to, in mint condition, 40% silver 73 coins alone would be worth about $20,000. That's an increase of over 4,000% over 50 years. The AMC Gremlin, the Gremlin, you don't want to hear what I know about these cars. The Gremlin retailed new back then at approximately $2,000. An average price of an AMC Gremlin mint now is $20,425 according to classic.com. That's an increase of 1,000% over 50 years. The Vegas trip we had to back into a little bit. The Vegas inclusive hotel stay retailed for approximately $933 for two people, subtracting the math there. That would amount to approximately $4,342 a day, an increase of 465% over 50 years. Now, we have the whole video and of that, and we're going to show that to you presently, but I just wanted to share that with you if you're looking at silver versus other assets. So let's take a look at the video itself, all right? So I'll click on Showcase, and we can see that. Now, hopefully you'll be able to hear this.
Your showcase, a new car. It's a Gremlin, a fun little car with AM radio, bucket seats, carpeting, side stripe, color coordinated grille, white leaded tires, slot style wheels, luggage rack, energy absorbing bumpers, and it's backed by the AMC Buyer Protection Plan. Take that new car on a trip to Las Vegas. Two of you will spend 1 week with food included at the Hotel Sahara in Las Vegas. And for added fun, take along 500 silver dollars. What's your bid on your showcase? $3,000 even. $3,000 even. The actual retail price of your showcase is $3,433. A difference of $433. That's a very good bid, Lucky. The actual retail price of your showcase is
I hope that translated through the microphone. If not, you can click on the story yourself, and it'll take you right to that video, and you'll be able to hear it in much better sound quality. It's certainly something to behold. All right. You can click on the showcase here or here. That's unlocked and available to everyone. It's really, look, 4,000% over 50 years. I know that the silver coins could be worth less than $40 per coin. I know that, but they're really not, because silver was kept down and it was locked into coinage. I mean, 4,000% over 50 years. You do the math on what that is per year. It's pretty significant. All right, moving on to something of a little bit more seriousness, but a little current events. Let's put it that way. Michael Oliver on Sunday put out his 360-degree report, and in it was an update, among other markets, was an update on gold and silver. So we're going to give you our commentary or take on that, right? According to MSA's Michael Oliver update in his most recent 360 report sent on Sunday, all key long-term buy signals for gold have been triggered, marking a significant continuation of the bull trend that began with the initial buy signal in 2016. We have a chart showing some of the concepts he's talking about there. Recent breakouts, particularly in March, have confirmed this trend, showing strong momentum and a clear upward trajectory in price. The next leg of this rally I'm paraphrasing him, but the number is his number. The next leg of this rally could propel gold towards the 3,000 mark relatively quickly before it encounters any significant resistance. Now, we have more commentary on that at the bottom in the premium section. So there's also an update on silver with regards to the 2010, 2011 analog. And I'll just share with you that it's a steady as she goes situation, and silver could start taking the lead higher in the next leg. So there you go. I think his phrase used was silver is the wild dog on the leash held by gold, and it's about to cut loose again. So steady as she goes in silver. Moving forward, data on deck today is the Case-Shiller Home Price Index. It will probably be heavily watched. We're looking at economic data right now. And there at the bottom, you can see more of our commentary about the gold market from MSA. All right, let's go to some intraday analysis. Let's hide this stuff here, right? So the daily chart, I'll tell you a little story, right? All right, so here we go. We have the run up on Friday. Powell does his speech. Everyone says, great, he's going to ease. Market runs up. Market makes a new high. The mystery seller comes in again. I know it doesn't have to be mystery seller, but I'm telling you that it is. The mystery seller keeps a lid on it. The market waits and says, oh, geez, this is going to go down again, right? And it goes down again, and someone again catches the knife. Remember, mystery seller goes down, catches the knife over a longer time frame. Mystery seller goes down, stabilizes, down again, right? There's no real help here, right? The point is the market caps, ranges, caps, ranges, caps, backs off and ranges, caps, backs off, but gets bought. So I would say this, excuse me, above 2481 basis spot, you should just be long if you have that kind of a tolerance, right? So we're trading at 2511. If you can risk, this is not advice, if you can personally risk in your heart $31, then that's where your stop loss should be, and you should be long. If, on the other hand, you are bearish and you can risk, what's the high there? 25.31, you can risk $20, you should be bearish, and you risk the $20 above. My comment is this: the risk reward seems like we're at the higher end of a $50 range, and therefore I'd be more inclined to be bearish. However, the macro momentum tells me there's just no way this is over. So that's it. Everyone, have a great day. I'm Vince Lancy.